Okay. Testing audio levels. Testing audio levels. Sounds good to me. I think we are all set here. Okay. So good morning, everybody. Welcome to another Engineering the Market. A slightly different setup this morning, so you may see a little bit of deviation from maybe some of the normal audio levels. All right, give me a second. Yeah, so this is the setup we've done before, Peter. So if there's a difference, then that wasn't really covered. Okay, well, I'm gonna go ahead and kick off here. We might have to switch out some of the setup, but good morning, everybody. Welcome to another Engineering the Markets. My name is Jared, and it is September 29th, 2022. Happy Thursday to everybody, and wanted to cover a couple things from yesterday. It's gonna sound pretty much like what we've been discussing this week. But you'll notice yesterday was characteristically different than the rest of the couple of trading sessions earlier this week. And as we've been noting, there's been a lot of view and sort of review of what's going to spark any sort of bullish session in the market, albeit we really haven't moved too far relative to our Friday close, as you can see by the SPX expected move. But we did have a bullish session yesterday. It was more or less a trending session on the intraday. And if you recall, there's a couple of reasons to think that, along with the setup needed to get involved with the trend. So we'll cover that just in a moment. So, just shifting back into the SPY, as we pull into our shorter term time frame and maybe clear out some of the volume. Let me get a 5-day. You'll notice that based on some of the levels that have been drawn, there are areas of interest this week. And as we've been noting, there's a certain feel for a high to low kind of trade. Yesterday, I think, was one of those sessions where things could have gone really in either direction. We were gapping down. We had stocks like Apple and Tesla starting off the session kind of weaker. And if you recall in the morning session, Apple did lead to the downside. It did require a little bit more of a thrust down to about 145 before seeing the reversal in the market. And I think a lot of the morning chop in the S&P could probably be attributed to some of that. But if you're looking at those key price levels, about 363 in regards to the lower bounds, we never really lost that area. You know, we certainly tested it a few times. Might have been challenging to kind of hold on during that period. But ultimately, we did break away from that. And I think once that happened with conviction, you know, certainly clearing this area and avoiding that weird spike through, which was more or less a pretty high volume event in some key stocks. Once we got out of that area, the market was trending. And I think this is important to know how far can it go. You know, where would I look for anything to counter this trend? And does it have to be countered? Does it have to be another sell swing in the afternoon? As we've noted, this market has some key upper bound levels as well. I haven't really marked 370, which has been the highs on most of our sessions, but instead I've been kind of revolving the discussion around 368.8, which was that Friday higher bound before we established value, and the lower end of that area, which often will set up if we start the session during that time. So yeah, I'm just making sure we're good for our next session. So overall, the market had an objective yesterday, and it certainly made it to those targets. It's even notable to see that into the afternoon, there's a very minute signal against the top of 368.8 that led to another extension, basically getting us slightly over some of the previous day highs, probably pressing a lot of bearish positions. And then of course we close right on that 370 mark. So we kind of slam back into the highs. So this week has really been, let's see. I'm just kind of seeing the how this is evolving. Yeah, we should be able to, once I stop streaming, we should be able to switch. But I'll let y'all figure that out. So the market really has been doing this behavior quite a bit. These are notable levels, and as you can see in pre-market, we're not done. We are not out of this range quite yet. No matter how good yesterday felt as a bull, we're still inside. And you can see that even now, there is still another chance that we can set up against this area and come back to the lows. If things reverse once again and we're just seeing all of that risk come back into the market, don't pretend like yesterday was the end all be all. We are still inside the range. So be extremely careful assuming. Anytime we have balance, the assumption of balance is that we're going to stay here for a while. It's hard to tell how long it's going to be. You don't really know when it's truly going to break away. But when it does, you'll feel it. You'll know. If you assume otherwise, just based on a single session, be extremely careful with that. You often will find yourself trapped in the wrong position or in the wrong location relative to the next move. And it's usually back inside, if not to the lower bounds. Now, bigger picture here, we are still a bit extended overall in the market. The 9 and the 20 are kind of catching up with the price. If I were to add the moving average exponential here, those areas are still kind of catching up with price. And one thing I will be watching for is something like the 9 exponential to actually become resistance once again. It might even push us back into that balance range a little bit harder if it were to be another spike outside. And it's where our price is anchored at the moment. So all of our daily sell swings are coming under the 9, which is showcasing a lot of bearish momentum. We really, as a bull, you really want to see this either flatten out and then some sort of bullish setup against and out of the balance range, usually with a nice upper back test. That would be an ideal bullish setup, using these lows as our risk, using the range as the risk. So wanted to note that for today. This is more of an intraday analysis. But let's talk about why this happened. What was so special about yesterday? Well, kind of walking through all of the risk elements in this market, the dollar backed away. We did have a swing high that broke the pattern of higher highs and higher lows every single session. Remember, an advancing or a parabolic chart like this gets to an extension that most of us are just kind of waiting for. You don't really know exactly where it's going to be. And oftentimes on a parabolic, this is the ideal scenario where you have a stalling candle. You know, if this were any other price chart, a stalling candle in an overextended state, you spike the high, aka you try to advance. And as soon as you can start seeing price below the close, and of course more confirmed below the low, actually breaking the pattern, that is your reversal signal. Doesn't matter if it works or not. That's the reversal signal. That is what you're supposed to use as a parabolic trader to define your risk, because you're really just looking at a overextended chart that wants to come back to normal levels. Getting into these standard deviation extensions, sometimes there's some linear regression elements to it, but really it's just going too far too fast. And you get these risky snapbacks, these moves back to areas of interest that have established the parabolic setup. I would argue somewhere around the 20 would be the most ideal scenario for this chart. Now, obviously, this can get here in a few different ways. It can trade sideways for a while the MA catches up, or it could see an actual price decline. But as far as explaining what happened yesterday, the dollar was a key component. And just seeing that on the intraday session gave you a lot of confidence to be long into most of the day. The TNX, this was another risk element. So we saw a 10-year interest rate, and I'll even argue that there was a pretty strong volume signal across a lot of our bond products. Whether you're looking at like a ZB for the 30, you're looking at ZN, there's actually big size being transacted here. It's notable size. So more than just a bounce or a green candle, the thing that's interesting is the volume. And it's coming off of a low end, so it's important to focus in on it, because this is how moves start. They don't necessarily have to be defined by that candle, but they usually start here, and this is when things start to change. Obviously, this was another overextended market. If you're looking historically, things like the ZN have reached into levels not seen since about mid-08. So we're talking about historic price levels relative to the futures product. And for me, I was looking at something like TLT. You'll notice I even have a position on here. But I was looking back at about 2013 levels. TLT is more of a blended treasury bond product, so it's a little bit on the longer tail end. But it's certainly the area where I expect these reactions to occur. And as we can see, yesterday signaled it. We certainly had the Bank of England and the stepping in that they're doing with their own bond product. That might have been part of it. That might have been the catalyst. But ultimately, the level was more important to me. You know, trade as you will. And then last but not least, our volatility. Now, this is one where your perception of volatility might make more of a difference. You know, we're certainly seeing vol futures kind of top out a little bit. Definitely was a stronger reversion candle on yesterday's session. But we're not out of the woods yet. This is not necessarily an end-all be-all. What's more important to me is that this signals that these contracts are no longer going to be backwardated. If we can see the vol futures actually flip back to a flat or normal structure, that provides a very bullish market dynamic case for the S&P to rise in price. Now, obviously, yesterday was a good sign, but as I mentioned before, getting out of that balance range is actually the first step. It's not like we're going all in here thinking bullish. It is definitely a moment to pay attention. It's where things can likely set up in the future. So, very important notes from yesterday. I would say that this is what we've been waiting for most of the week. Hopefully you've been trading that balance range with some conviction. And I'm just kind of walking through some of the other VIX indicators. People weren't necessarily grabbing for premium yesterday. You saw this kind of massive reach for protection that abated slightly. Obviously, we'll see how this evolves now that we have a high and a low. And then the VIX, of course, at resistance, coming back to 30, basically the inflection level. It's whether or not we're going to see more of this extreme, or was that the extreme? Was that the top? That is always what we're trying to evaluate. And we're just kind of looking around to see if there's any reason to think otherwise. So, I guess some other things that were kind of notable yesterday, like I said, there are dynamics in this market that matter more on the short term than bias. And as we saw with Apple, regardless of the news, regardless of what you thought was going to happen yesterday, Apple bottomed jeans at 145 and made its way to 150. There were pullbacks along the way. There was obviously a grind to get there. But because the market was correlated bullish, even one of our weaker stocks, like Apple, had an objective. And y'all know what that objective was. It's 150. It made its way back to gravity. That was kind of the warning if you saw the market pushing in one direction. If the market correlated, Apple had a good chance to get back there. And there's ways to play that. You can be bullish on the session, just looking for sort of your trend signals to get long. You can even play options. Really be thinking about how clear these levels are and think about how to play options towards it. Do you want to sell premium at 150 or slightly above? Feel free. You want to put a butterfly at 150 that expands throughout the session? Feel free. Do you want to just buy calls and you hope that the momentum is strong relative to your location, especially if you're near the lows? Feel free. These are all strategies, but the objective is the same. It's getting to these gravity points, these levels of interest. And obviously, as we mentioned historically, this can be the beginning of the end for Apple. This is not necessarily a bullish signal. But if you played it wrong yesterday, you probably were a little disappointed. And that's because of that market dynamic, that strength, more or less coming from the fact that the market was correlated. And Apple has a very clear start point. Where does it go whenever things are moving in one direction? Now, obviously, we've seen this before, so it can get bad. It can get bad now. Things can change. But it's noting what happened yesterday and that power behind it, that volume. That's hard to fight. So anyway, those are some of the setups yesterday. I think for the most part, I'm not going to really reiterate too much more. Market is back in a position to reject. Yesterday was an event, a moment in time. We had a lot of things just happening all at once, and obviously things were starting to benefit from it. Actually gold would be a good one to watch too. Dollar coming off, look how strong gold was yesterday. It's obviously just moments in time. These can easily change back into their positions of weakness and or strength. But depending on what you're trading, if you ignore those signals on the short term, you can really find yourself trying to trade against those types of trends. They're very difficult to manage. So why not trade them at that moment and then look to counter once things are back into their pullback regions? Where are you supposed to get short? Whether or not it works is up for the market, but where are you supposed to be? You're not supposed to be short at the lows. That's not how the market works. You tend to get pullbacks against you. So with all that said, I think for today, keep those strategies in mind. Whether you're looking to maybe get short Apple and look for the Apple to actually break away from 150, might actually happen today with the setup. Whether you're looking for another balance move back to the lows on the SPY, or whether you're actually kind of targeting some of these other products. I mean, we have some traders in the room who've been trading precious metals. Gold has been kind of in focus now that the dollar is so clear with that inverse correlation. Personally, I'm looking at bonds. I'm looking for ways to get long off of these extremes, because if I'm right, this is a really good risk to reward, even if it fails in the future. It can obviously just be more of a temporary bottom. And then, of course, as we kind of look across our equity landscape, the stocks that were weak yesterday in the morning, they recovered. A lot of them had nice recoveries, even though they're still positioned poorly big picture. And another stock that I've been watching a little bit here is Meta, just because of where it's at. It's a very interesting location, and these are moments where we might look back, maybe in a couple weeks, and just say, wow, what an opportunity that was. Even if it doesn't work later, it was an opportunity then. And knowing that helps us. It helps us get into position. It helps us know when we're wrong. And it also helps us understand what's driving the market at that moment. Because sometimes it might not make sense, but there are dynamics in place that simply are forced out first. Things that get too extreme, you often have to revert first before continuing. So I'm going to go ahead and leave it there for today. Call it kind of an earlier session. One, I don't have much else to cover, and it is Thursday. Two, I'm going to allow for the pre-market prep team to kind of get set up. There might be a little bit of swapping in, but overall I'll let them kind of explain, and that'll hopefully give them a little bit of a window to get set up. So with all that said, my name is Jared. This is Engineering the Market. Trade safe for the rest of the week. Understand these dynamics. We might still have a couple of those back and forth moves ahead of us. But for now, with yesterday's session, understand that there might be some new interest here, some renewed bullish sentiment, and really they're just playing the risk. They're playing the opportunity. We should as well, regardless of if it works or not. So trade safe. We'll talk more next week.